But now let's pivot to another conversation that's still within that line. What started primarily as a tool for, moving value around digital asset market is now, being positioned as a new rail for cross-border payments, treasury management and settlement. And Africa is emerging as an important testing ground. With, multiple currencies, fragmented payment systems, and the high cost and complexity of moving money across borders, the continent is, some of the conditions where stablecoins can offer a practical alternative. Our global financial institutions are now taking notice. Likes of Standard Chartered, for example, they've expanded their institutional stablecoin capabilities, while African-built fintech infrastructure players are building the connections between local markets and global digital payment rails. So why are global financial players betting on infrastructure built for markets like Africa? Joining me for this conversation now, we have Lasberry Ludemush, is the MD, Yellow Card Nigeria. She joins me right here in the studio. It's great to have you. Good morning.
Good morning, Ladi. Always a pleasure to be here.
It's been a while, and definitely a lot has played out so far, and I'm sure you did hear the SEC Director General there. I know before now, SEC, digital assets, they have this strained relationship, but I think things are getting better. How's it looking in your opinion?
Yeah, things are getting better, and it's quite interesting that at this point we can now approach the regulators, and the regulators are actually doing a whole lot, right, to ensure that the good players actually do business in a very comfortable environment. So I really commend what the SEC is doing, as well as the other regulatory bodies, to ensure that this space is well regulated, because that's actually how we can grow. That's how we can scale. Without regulation, we can't scale. So Nigeria, being the biggest economy in Africa, is also expected that we have a very robust regulation in this ecosystem, and the SEC has just taken that and ran with it, and we're so excited what the future looks like for us in this ecosystem.
The council is moving.
Exactly.
At this point, and we see the NRS also moving.
Exactly.
Looking at taxing crypto.
Exactly.
At this point, and digital assets. So let's piggyback to what Standard Chartered, did recently, and other global financial players. They're choosing African-built stablecoin infrastructure companies to actually, move monies around, because when you look at, crypto, it seems it has, or digital assets, it has moved from, buying Bitcoin, trading, and making profit. Now it's stablecoins, moving money across continents and countries, at this point. Talk to me about this latest one.
Okay, so the global financial institutions, the key interest there is not to invest in Africa, right? But the key interest is basically the stablecoin capabilities, what stablecoin can do in this financial institution, for these financial institutions, right? Just like you said, when stablecoin came in earlier, it was basically used for buying other digital assets, right? Some people were using it for price discoveries and all that. But what we are seeing these days, or what we have seen, is African businesses, African fintech, that have actually taken stablecoin and built a whole lot of strong products around it, right? So stablecoin is no longer used for price discovery. Stablecoin is not used to buy Bitcoin, like you said initially, but stablecoin is now used as a payment rail. Stablecoin is now used as a means of managing your treasury. So what the global financial institutions have seen is the use case for stablecoins beyond the use of stablecoin to buy other digital assets. There's a whole lot of problems that stablecoin is solving. And if you look at what the African fintechs are doing, it's like we have built something that has been recognized globally, right? We have built something to solve our own problem in Africa. Like Africa, we have about 54 countries, and within the 54 countries, we have about 42 currencies and all that, right? So we're not just dealing with currency volatility, we're dealing with multiple currencies. We're dealing with fragmented payment system. We're dealing with fragmented regulatory framework, right? So what we have done, like a company like Yellow Card really, is to come together to say, what can we really use stablecoin to do? How can we use stablecoin to solve the African problem? And now we've been able to do it. Now the global institutions have now seen value in it. If we can solve the problem, the legacy problem in Africa, and don't forget, they're also experiencing most of those problems because they have business that they serve that are also within the African continent, not just within the African continent, also within the emerging markets. And we're facing almost the same problem. So if stablecoin is solving this problem for the Africans, it can also solve the same problem for the emerging markets. And given that the likes of StanChart, they have businesses across the world, they have businesses doing also some businesses in Africa, emerging markets, and even the developed economy. That is why they are now interested to solve the hardship that the legacy or the hardship that the traditional finance has actually caused on those businesses. So it's actually the value they are looking at and not interest, not really investing in Africa, but they want to utilize and they want to be part of that ecosystem. They want to see the capabilities and even expand it beyond what African fintechs have done.
It's quite interesting. I remember many years ago, we're talking 10, 11 years, the whole point was decentralization. Bitcoin, stable coins at that time, it was all about taking out the middleman. And when they talked about the middleman, it was about taking out the banks. But now we've come to a time where we're actually seeing the banks actually find a use case, for this. But the thinking, back then was this was disruption for, traditional finance. But it seems we're moving from that.
Yeah, that was actually a misconception, right? You will never take out the traditional finance, right? What stablecoin has come to do is to improve the efficiency, is to make them to be able to move funds in a more efficient manner, saving costs as well as saving time, right? Just while I was seated downstairs, I had this invoice that was being processed on 3rd of last month, right? And today is about 10 or 9?
10th, yeah.
Good. The beneficiary hasn't received value. The invoice was sent to us on 31st of last month, 31st of July. This is 10th of August. The beneficiary hasn't received value. And when I looked at the history, I've discovered that that payment has actually passed through about 3 to 4 intermediaries. The beneficiary is still waiting to receive value, right? So just think of using stablecoin. What if you had used stablecoins for this transaction? It would have just been received the same day, in minutes, right? So we're not going to do away with the bank. Stablecoin is not in competition with the traditional finance. Rather, stablecoin is complementing the traditional finance.
Right.
So the banks will always be there. And what they can do with stablecoin is just to improve their efficiency, just to reduce cost in moving funds around, and also reduce the timeline for moving funds around.
Yeah,
so the banks will always be there.
It's quite interesting how stablecoins, they can move in seconds, across continents and all of that. But with what's playing out, at this point, what are you seeing, going forward? Do you think, does this technology evolve or does it remain the same, in your mind? Because now we're still talking about artificial intelligence at this point, investment in data centers and all of that. Where are you seeing stable coins?
It will definitely evolve, right? Now because global financial institutions are jumping in. Everyone is exploring. Everyone is trying to be innovative, right? What we see presently is financial institutions and businesses using stablecoin for cross-border payments, treasury management, or maybe merchant checkouts, right? Businesses are still building. There are still innovations around stablecoins, right? What it will be in the next 5 years, I'm not sure I know that. But one thing is clear, there will be a consistent innovation around stablecoins, right? So what I would say is let's deal with what we can use stablecoin to do right now, right? And don't forget that there is also, like Doctor also mentioned, there is always a place for regulation, right? And because we want to, I wouldn't say, because we want to take advantage of the speed as well as the low cost benefit you can get from it. We can't trade compliance for speed. So there has to be regulation, which is what the SEC has been pushing for, which is what the SEC has actually been doing, right? So there will consistently be innovations around stablecoins. As I sit here, we're also thinking about additional products to build around stablecoins. So the journey is too far for us to know.
Far.
Exactly.
It's still quite far.
Yeah.
All right, but definitely, we keep tracking regulation, and that also seems to be evolving. Also, everyone's still trying to wrap their heads around regulation and taxing. We're seeing latest talk from the NRS here in Nigeria, looking for ways to actually tax cryptocurrencies, stablecoins, and all of that. Are you seeing risk ahead when it comes to regulation? But before you answer that, we're going to join a live coverage now in Bauchi State, commissioning of township roads and a groundbreaking of parks. That's for our DSTV subscribers. You can still follow the money right here on all other platforms that we stream at this time. So are you seeing risk, at this point?
Ladi, this is the whole, whatever we're saying now is natural. There's nothing strange about it, right? We have seen it in different markets. We have also seen it in Nigeria. When we have innovations like this, there has to be regulation. And when regulation comes up, obviously we don't expect the regulators to get it 100%. That's the place of amendment, right? That's the place of having conversations with stakeholders. So there will be regulations, like the DG said. Most times when regulators publish regulations, most times there has been some conversations with stakeholders, right? But that doesn't mean the regulators will not remain regulators, because there's also something they are looking at, they are saying that we're not saying, right? So there is a place of engagement. There is a place for consistent discussion. If things are not right, if you think, oh, this shouldn't be this way, then we should sit around the table and talk about it. So this is not the first time we're seeing regulations, and we'll keep seeing regulations. So as we innovate, as we explore, the regulators will always come up with one regulations or the other. But at the end of the day, we'll all smile and shake hands.
Fantastic.
Yeah.
It's great. Great place to anchor it there. Thank you so much, Lasbury Lodimu, MD, Yellow Card Nigeria. It's great having this conversation with you.
Thank you so much, Ladi.